Hey guys, it's Elliot. I hope you're having a fantastic day, and today's topic, what's in a mortgage? It's a common question I get all the time. Elliot, what's in a mortgage? What goes into it? What does it entail? Does it stay the same, as in can it go up? Can it go down? So many people I work with, more specifically first-time homebuyers, ask this question when they found a home they're interested online and they realize they have zero clue on how to go about financing it. But hey, no worries. That's why we're here. We have this amazing platform and I've got you covered. Now, in no particular order, the first part of the mortgage is the principal, aka the cost of the home itself. Typically, when you sign on for a home loan, you and your lender come into an agreement of the length of the loan. Some may pay it off over 30 years. Some may want to pay it off even sooner, over 15 years. There's no right or wrong way of going about it. One thing they both have in common is the fact that the loan has to be paid off. If you borrow $100,000, $200,000, whatever that amount is for you, you have an obligation to pay off your loan. That is the principal amount. The second part of the mortgage is the interest. Now let's be realistic. Banking institutions love to lend money because it's an investment for them. If they agree to loan you the money, they'll charge you a percentage in interest to make it worth their while. Now, regardless of the loan, whether it's a home loan, automotive loan, personal loan, a general rule of thumb is that the longer the loan, the more you'll end up paying in interest. So if you wish to keep more money in your pockets for the term of the loan, pay it off quicker. Now, the third item on the mortgage is the homeowner's insurance policy. And you're going to want one for a few reasons. One, the lender will require a policy in place to protect its investment. And as for you, you'll want a policy to protect your home from accidental damage and whatever valuables you have within it. Now, the convenience of having your homeowner's insurance policy built into your mortgage escrow account is your insurance company will bill your mortgage company directly. No need to budget for a four-figure expense on an annual basis. They'll already have calculated the cost and bill it on your monthly mortgage, and essentially, it's one less thing you have to worry about. Now, moving on to the fourth item within a mortgage is private mortgage insurance, also known as PMI. You might have heard that term before. Private mortgage insurance is somewhat optional and isn't on every mortgage. Let me explain. When you're contemplating on buying a home, you may have heard your parents push over and over again, hey, make sure you put 20% down payment on your home. The thing that bothers me about that is I've noticed parents, not all, but a lot of parents, people that I deal with, they'll always say, hey, make sure you put 20% down, put 20% down. However, they never explain why. They just say, oh, hey, you don't want to have that additional PMI cost. Well, what the hell is a PMI cost? No one knows what that PMI cost really is. So parents, please do yourselves a favor. Explain what a private mortgage insurance policy is, so at least your kids will understand why it's so important to save 20% on a down payment of a house. That's a lot of money. Not a lot of children I know within that college age, post-college age, they don't have that kind of cash lying around. So if you find it very important, please stress exactly what it is and paint that picture of what it looks like. It'll definitely go a long way. Now, for those that have no idea what I'm talking about, you may be thinking, what exactly is private mortgage insurance? Think of it as a lender's insurance policy. Knock on wood, if you ever lost your job, have an unfortunate health-related incident, or anything happens to the point where you are unable to continue paying your mortgage, this private mortgage insurance, or also known as PMI, will help the lender recuperate some of the potential losses. Now, I won't speak for any lender since I'm personally not a lender, I'm a real estate broker. However, the way I see it, any loan provided to someone who does not own 20% equity in their home would be considered a high-risk loan. For example, if I were in their shoes, I loaned someone a loan for 96.5% of the purchase price, allowing the buyer to only place 3.5% down as a down payment. I've got a lot invested in this property. What if on the off chance the buyer lost their job 5 months after purchasing their home? To keep things simple, I am able to foreclose on their property and recoup as much of my investment back. Now, I've got to assume the risk of hiring the proper professionals to get this financial liability off my back. So for reasons related to this and others, this example should better help you understand why PMI costs are on the mortgage. If you don't want it, put 20% down or pay enough to rid the policy altogether. The final portion which makes up the mortgage are the taxes. Now, taxes like PMI is optional to be built into your mortgage. Some people prefer to budget for the bill itself and write a check back to Uncle Sam. I personally prefer to have my escrow account calculate the additional costs on top of my principal, interest, and homeowner's insurance policy for the convenience of having one less thing to worry about on an annual basis, semi-annual basis, if you will, as we pay taxes twice a year. From a personal standpoint, the last thing I want to do is have unpaid back taxes and have to deal with the wrath of those consequences. So for my family and I, this is the route we decided to go. At the end of the day, there's no right or wrong way of how to go about it. The decision is ultimately yours. So to recap, we've got the principal, interest, homeowner's insurance, PMI, and taxes is what makes up one's mortgage. A little tip on how to save a few bucks. I bundle my homeowner's insurance policy with the same people that run my car insurance policy. You may have heard of something called a bundle discount. So that's all I've got for you on this one, and I do have one question for you though. Did you learn anything of value, something you didn't know before? And if so, please let me know. If not, make something up and say you did. It'll definitely make me feel better that I was able to help someone out there, and it'll also make someone else feel better knowing that they are not alone. Like I always say, real estate is not something that we are taught in school, and so this is why I'm doing this. Hopefully I can share some knowledge with you and make everyone feel comfortable around the topic. Don't forget to give this video a like, as it does help grow the channel, and subscribe if you haven't already. If you or anyone you know are looking to buy, sell, invest, or even rent in the distant or near future, please feel free to reach out my way. Contact info will be in the description. When you come across any questions, please let me know. Don't be shy, and I will see you on the next video.